What's up? What's up, everybody? It's Monday. It's May 10th, 2021. I am Big Cheds. This is a program put together by Benzinga. So I want to say thank you to Benzinga for doing that. This is Making Bread with Cheds. I am a teacher, an educator. I'm a trader, candlesticks, classical charting, trading psychology. I've made every mistake in the book. So I'm here to kind of help you avoid making those mistakes. I actually wrote a book called Trading Wisdom, 50 Lessons Every Trader Should Know. And I took my mistakes and I really kind of put them in a format that's easy for you to understand. And that's a little bit of what this show is about. I want to make crypto, I want to make technical analysis easier for you to understand. We're going to try to identify the direction of the price action. We're going to look for ways to benefit, to take advantage of that. We're going to try to buy some weakness in the uptrend. We're going to hopefully learn when our favorite project is when the chart is turning around, and so we can stay ahead of trouble or out of trouble even. So we have some great guests. This is episode 7. We do have my man Big Chonis, that's actually his bull. That's Big Chonis's bull right there. We have him coming on as a guest tonight. He's a great trader. A lot of people had asked for him to come back, so he will be our first returning guest. I'm looking forward to having him. But let's get the party started. We'll go ahead and share my screen. I'll just briefly run through a few things. Of course, you can find me. I am on Twitter at Big Cheds. Twice published author. My first book was my cancer memoir, My Battles with Cancer. And now we have, like I said, Trading Wisdom. I just published my Trading Wisdom book. If you're just getting started, go to chedstrading.blogspot.com. I have a free blog for beginners I put out a few years ago. You can check that out. And if you're ready to take your technical analysis seriously, go to Bitcoin Live, the best-in-class educational platform for crypto, where I'm a founding analyst. Very proud of that. Now, in Bitcoin, we have here the daily chart up. We have about an hour until the daily candle closes. Just kind of a note on that. Some people, use indicators. I have the on-balance volume. I have the RSI. Some people don't use indicators. But if you use them, especially if you're going to draw a divergence or whatever you're going to use them for a signal, you wait until the candle closes. So we have just about an hour left. You're pretty safe there. But today is Monday. So for example, if I went to the weekly chart, there's 6 days left on this weekly candle. And if I'm going to try to draw some conclusions based on the data of this week's RSI, I'm not doing it right. There's only 1 day in that candle. So always pay attention to how much time is left in whatever candle you're using when you're paying attention to any kind of signal. A lot of people on shorter terms use like a stochastic RSI or an RSI. Just pay attention to when the candle's closing. What that means is the best time to look at the chart is at the daily candle close, or if you're 4-hour trading, it's going to be every 4 hours really. So pay attention to that. Let's just stay here on the 4-hour chart. One level we've been watching is the MA200, the 200 period simple moving average. A simple moving average just means there's an equal price weighting for every period in those 200, rather than an exponential moving average, which is more sensitive to price, which would be the green line. You don't really see it too well on here. You see it a lot better on the weekly chart for Bitcoin. We see how that green line, the weekly EMA 8, had been support all the way up. But the point I wanted to make on that simple moving average, the 200, for the 4-hour chart, that this was a level of significance. So with moving averages, you don't want to just pick a number and use it. You want to see if the price is paying attention to it. And we can see it here. We can see the price. We can see the price respecting it. We can see the price respecting it, coming back, respecting it, right? We can see if we want to look and see if the price is what the interaction between the price and that moving average is. It's respecting it. It's respecting it. Right? So it was support. It's pretty clearly established. Hopefully you can see at this point, it was using that as support. Okay. Now we've been trading for a little while on the underside of that. We traded below. We had what's called a pullback, or the bearish retest of that 200 MA and we formed what, reasonably could be thought of as some type of an inverted head and shoulders continuation. Could have drawn maybe a descending neck base, maybe a horizontal neck base line. That's all happening at this 200. So we're kind of chopping right around it. Every time we get back up above it and we looked like we had really turned it into support. Like earlier today, it seemed like we had turned that 200 MA into support. We flushed right back down below it, right? So we're back below the 4-hour 200, the 4-hour MA200. We do have a nice candle forming. There's still an hour left in it, but you could call that a hammer type candle. Even though it's not a shaven top, there's a little bit of an upper wick. You could reasonably still call that a hammer. It's a reversal candle at the lower Bollinger. So with any Japanese candlestick signal, it needs something to reverse. So a bullish reversal signal like a hammer, you want it at the lower Bollinger. You don't want it at the middle Bollinger, right? And a bearish signal, you want it up here. You don't want it in the middle of the channel. Like, for example, on the daily chart for Bitcoin, we had a shooting star candle just a few days back, and there's really very little follow through on that. We had that shooting star candle on May 3rd. I talked about this in my Bitcoin Live video. But the context of that candle was the middle of the channel. This is not really a position in that channel where you'd really pay that much attention to that candle because it's in the middle. You want this candle up here, right? So Japanese candlestick signals, these are short-term reversal signals. We want them in the proper place. Upper Bollinger for a bearish reversal, lower Bollinger for a bullish. In the meantime, we're just watching these key moving averages. So we talked about that 4-hour 200. We talked about the weekly EMA 8, kind of right back up above the EMA 8 here in the weekly. But the price, it's not exactly respecting it. It's closing above it, but it's kind of chopping through it. So it's a tenuous or more of a temporary, or it may be harder to hold that. For now, we're seeing that the bulls are having trouble, a little bit of trouble holding it. And daily, that 50 MA. Why the 50 MA? Big Cheds, you just picking random numbers? No, that's not how I am. 50 is a very commonly used moving average, medium term. We can see that the price, as the price had accelerated, and you get these strong price movements and accelerations above the upper Bollinger, you pull back. Sometimes you pull back to the MA20, on these deeper pullbacks, sometimes the EMA 34, the yellow line, and then sometimes you get, down to the orange line. So here we get a little close to it, but not quite. Come up again, MA 50, right? MA 50 here, definitely. So we're seeing the price respecting the MA 50 area thus far. And then again here, and then again here, MA 50, and then again here, right, MA 50. So you can see that in these pullbacks, and these happen to be, this was like a 30% correction. I don't, off the top of my head, it was like a 30%. This was like 27. I think this was like 23, something like that. So these were pretty serious, primary trend, secondary trend, right? These are pretty serious secondary corrective moves within the primary, or within the stronger uptrend at that point. And that brought us back to the MA 50. And so that had held, right? And then whoops, it didn't hold, right? And then April 17th, April 18th. And that brings us to the discussion of confirmation and how do you confirm a move? Is it just a candle wick below, or is it a candle close? It depends how conservative a trader you are. And you can see we had one close right at it, and then one close below. Okay, 2 closes, 3 closes. You get that third close before the flush. So there's ways to, depending on how conservative a trader you are, but you saw some signs of weakening MA 50 and the follow through on that. What's the response? Bulls have rallied from that 47K level at intraday or during the day. At one point, the RSI was sub 30 on that, right around that 47K bottom. On April 5th, we bounced pretty strongly, but we're having trouble at this point getting over that like 59K, 60K level. You'd expect, and I had been and I have been expecting, and Bitcoin's been more bullish than I thought it might have been on this relief bounce. I've been expecting some type of a lower high at some point. We had that big high, you come down, you set your low, you have that kind of double bottom type with the lower low. We talked about that last video, the stop loss sweep. We talked about that, and I'm expecting like a lower high, maybe here or maybe here. And I'd been expecting, some type of consolidation like this, right? And so what Bitcoin did, and went and broke these lower highs. So it's a little more bullish than you would normally think it would be under this type of a consolidation. So that gives bulls some hope, but we need to stay above MA 50 on the daily. We're having trouble doing that. We need to stay above the MA 200 in the 4-hour, having trouble doing that. There's a lot of other stuff going on in the market. What time is it? 7:11. Let's roll into the lesson of the day, and then I'll bounce around a little bit. And lesson of the day, if we have that coming up. Lesson of the day. This is actually lesson 19 from my book, Sell and Move On. So cutting failed positions, right? That not only frees up, trading capital, it frees up mental capital. So, if you have that red position in your folder, and you keep your brokerage, you keep hitting refresh every day, it's there. Like it's owning you. It's living in your head rent free. You cut your losses, you cut your failed trades. It's amazing how you can feel once you've decided, you've defined your risk, and you said, that's my level. This is the maximum I'm going to lose. I'm cutting it here, and I'm moving on, right? I'm going to sell and move on, right? Great way to do it. Another way to run afoul or to get in trouble is to, let's say you have a failed trade in a coin, pick one, XLM, and then you think, I have to make that $200 back in XLM. No, you don't have to make back the money you lose in one trade in that same trade, right? You probably have a bad feel for it. Maybe you don't, but you probably do, right? Think about it. If you tried to play that particular play and it didn't work out, the chances are better than they were before you started that you don't know how to read that chart, that you don't understand the feel of that price action. So you don't have to make that money up in the same play. Go make it up. Go try to make it up in something else, something new, something fresh, and preferably something uptrending. So, lesson of the day from my book, Trading Wisdom, 50 Lessons Every Trader Should Know, available on Amazon, is that you should sell and move on. We talked about Bitcoin. Ethereum's been unbelievably strong. We'll very briefly, obviously, talk about Ethereum. Let's go 4 hours. Let's go back to daily. We are getting, this is a high wave spinning top right now in the daily chart. It's a small real candle body with a long upper lower shadow. It's a volatility candle. It's to be expected. We're talking about Ethereum. It's been one of the strongest plays out there. You want to identify dip buying levels. You want to be a buyer, 3,600 range for sure. Certainly that rising EMA 8, you can kind of establish that, use that as your trade level as well. So Ethereum definitely buying the dip until proven otherwise. We saw Litecoin hit that 400 level. And that's interesting here. Just briefly, we can see we initially broke the high of that April 12th week, right around 330. Once we broke that level, we kind of zoomed out. We saw, okay, our next resistance is at 380. We actually hit that, a few weeks later. But what's most interesting to me is the concept of the throwback or the bullish retest. So we had initially established this as resistance at that 336, 340 level. When we broke through, price is 390. I think maybe even a little bit higher at that point. And you think, oh, I missed it. Well, did you miss it? You set a low ball bid, 335, 340, 345. You got rewarded because you've already bounced quite a bit from that. So look for these strong charts to establish, a resistance level such that once it's broken, right? Once it's broken, a resistance level that once it's broken, you can target it as kind of a dip buying zone. You can target it as a dip buying zone. You see it, right? The bullish throwback. It's a great way to structure your trades. You want to be playing strength. You want to be targeting dips in uptrends. That's your bread and butter as a trader. That's what's gonna get you, keep you in the game, right? You can get in a lot of trouble trying to play these reversal plays and getting stopped out and all that. Let's see. Let's talk about Dogecoin. A lot of you are probably interested in Dogecoin right now. On the daily chart, the daily chart still looks pretty good. That's LTC. That's pretty funny. There's the Doge chart. Dogecoin, yeah, it still looks pretty good. What we have is we have an initial resistance level established, and we have the price in kind of a nice long consolidation after making that initial peak. The price, hit that upper Bollinger, You know, a little bit of air there from the moving averages. We came back, and right around here, MA20, the brown line, which is the middle Bollinger, and EMA 34, you know, we bounced, we made a new high, and then here we are again. Look at that, right back at the brown line, right back at the 20 period moving average. We also have kind of with today and yesterday's low, kind of like a tweezer, which is where you have two sessions in a row with basically the bottom or the top at very pretty much the same area. So what that's telling us is bulls are saying, you know, not just bulls, but the price is saying this is an important level. We want to be listening to the price. We can see that this is a key level. Okay, we should feel comfortable initiating a short position if we break this level, and we should feel comfortable initiating a long position, kind of on a retest of that support level, right around like that 41, 42 cent area. So that's what I would do with Dogecoin. It's pulled back quite a bit, but it still is in pretty good shape as long as that MA20 and that 40, 41 cent area can hold. Let's take a look at some other ones. Let's see. I guess SHIB has been popular. I'd never heard of it till recently. I mean, there's not much of a chart on this. It's only got 4 days of price action on Huobi, maybe on some of these other exchanges. You know, it's popular right now. You can see why it's moving, but there's not much you can do with such a short time frame. I really do not have that much commentary other than it. You know, you can see here at least some accumulation on that short time frame. I was interested to talk about, let's see, I did mention XLM. It's actually interesting. It did have a little bit of a breakout recently. It had been kind of playing second fiddle to XRP when XRP had these big pops. And we see XLM now, it kind of gathering. It made that high. It slowed down around 70 cents, came back down. Again, looked like we were going to kind of reject in that area, pulled back, found support, and we had that breakout today. We have had kind of a market-wide pullback, so it's not surprising to see, that happen. Just going to see if our guest is getting ready to see if that would that happen. But overall, the picture has improved here in XLM. You can see evidence of that accumulation with the OBV. Everything else does look pretty strong. Our next guest is at Big Chonis. I'm going to show that for you on Twitter. He's a great trader. He and I used to do shows on YouTube back in the day. And he brings a lot of personality and a lot of different perspective. I think that's a lot of fun. I'm just going to check with Spencer. Do we have him ready, or do we need just a few more minutes for our guest?
Can you hear me? Just looks like just another minute, I think.
Okay, so he'll be on shortly. I think he's just getting ready, but he'll be. I really look forward to that conversation. If you're just watching this for the first time, go back. We have some great. This is episode 7. I've sent some amazing guests. So definitely, I would encourage you to go back and watch some of the earlier episodes to kind of see what it's all about, and to kind of see what those guests have to say. That's why I bring them on. I want you to hear from them, not just from me. I have my own perspective, but it's important to kind of get to hear what other traders have to say. Just while we're waiting, I'll just cruise around, taking a look at Link. That has been a very popular one as well. And we did get back up above $50 recently, which is a big level psychologically. But we do have that kind of reversal type candle here with the wide range, where we got up to 53, pulled all the way back down to 40. And, this just really goes to the idea of being that patient buyer. You think you missed it, set that really low ball bid, like $41, $42, you're already up like 10% on that. So pick what you want to do. Not just in anything. You need to pick a bullish chart, and you want to really pick like a support level that's further down from where the price is currently. So let's go take a look at, for example, Uni has been really strong. So Uni's kind of doing that. So there it was. Oh, MA50. I mean, this has been the level on this chart. I mentioned it when I talked about it. I've mentioned all the time, and it's amazing. Look at that again. I don't know. I must have been doing something because I missed this one, and maybe I should have set an alert. But you can just see how well the price has been paying attention to that moving average support. And we got all these fake outs here. And we actually had never closed below the 50 until the April 24th day. And then lo and behold, that next day, we just accelerated right back up. So if you're not in this one, I would definitely identify this as a buy the dip one, uni. And this is one that you can establish a key level of support to buy from the MA50. And in this case, also lined up kind of with these highs from the April 3rd and the April 6th day, as well as this consolidation there in the middle to the end of April. And let's see what else we have as we're getting ready for our guest, Big Chonis, to join us. We talked about ADA. I think I may have a better chart that has a little bit more price history. It was interesting to see because ADA had been consolidating for quite a long time in this bull rectangle. We finally broke out of it. So after that strong move, we broke out of that 30-40 cent range. We pushed right up, and you can see the price, with these 3 peaks here, 1, 2, 3 peaks. And with these troughs or these lows, you kind of see it establish that rectangle, that long kind of sideways, pardon me, that long kind of sideways consolidation. And so what you want to think about is the fact that the longer you consolidate in an area, right, the more significant the break of that area is. So that's something we want to pay attention to. So we had a significant break. We also have the long consolidation after the advance. So the chances are that you're going to continue in the direction you came from because trends tend to continue. That's the general rule. Trends will continue more often than not. So we have the breakout, and look at it today. Look at the low, a little bit of the throwback or the retest, the bullish retest of that initially established resistance that was broken and came back and retested, right? You definitely heard me saying that before. That's something that I often talk about. Let's see here. Do we have any update, Spencer, or are we still in the waiting pattern?
Still holding. I just shot him a message. Couldn't hurt if you did as well.
Yeah, no worries. I think he'll be just here any second. Let's continue on to see what else. We talked about Litecoin. We didn't talk about Bitcoin Cash. Bitcoin Cash has been really strong. $1,400. I mean, this thing was just hanging around in the $500-$600 range. If you talk about being a patient buyer, look at that right here. So look at that. So we were all the way up at 1,200, and you get to fill back at 700. And what did you do? You understood that resistance, once established, you broke through it, right? Boom, came back and tested it. And that was a key level. So a patient buyer was definitely rewarded, from that buy right around that 750, 760 level. Look like we have our man, Big Chonis, if you want to pipe him in. Yeah.
Hey, buddy.
How are we doing, man? It's great to see you, Big Chonis. Thank you for coming in from Malibu tonight. I know the weather's nice where you are.
Big Cheds, great to see you. It's been a while since we've spoken. It's nice to be here. Let me just button up my tie here, get my suit all nice and pressed for you there. No, listen, this is a very interesting time here for Bitcoin. It's been an amazing year, and I just can't believe all these things that you've been talking about for years on Twitter and everything about the full Bitcoin full spectrum from the bullish market of 2017 and early 18 to the bear markets of 2019 to the fake bull market, if you will, of the summer of 2019 to the COVID crash of March of 2020 to incredible all-time highs now in Bitcoin, Ethereum, Litecoin, just the variety. So just an amazing time to be part of this industry, and it's exciting to be here with you this evening to discuss these fine things with you.
It's funny. You actually got me into crypto. I don't know, most people know this, but we were hanging out at your house, and I saw on your. Okay. How about now? Nope. Well, I'll talk.
There you are. I can hear you, buddy. There you are.
Yeah. Well, so I was gonna say, most people don't know you got me into crypto. Or not that you got me into it, but because I was into it. You know, you showed me your phone, and it was in 17, and it was Coinbase, and I saw, Ethereum, Litecoin. I thought, why does he have precious metals in his phone? Like, I didn't understand what this whole thing. What was a crypto? And so it's been a great journey. We've been trading for a long time. And so I'm interested to hear, you've been looking into like the whole lending thing and finance.
So I think what's so different about this particular time in crypto from the last bull market cycle top, if you will, is there's so many more advancements using blockchain technology and really seeing what we can do with this new burgeoning industry, which is the decentralization of financing. And I think that the way that the ledger works, specifically with blockchain, has allowed this new and burgeoning thing to emerge. That it's interesting. A lot of these projects that have had such success over the past year really were matriculating, through the bear markets of 18, 19, and early part of 20. And what's so interesting is that they were positioned perfectly for this kind of moment in history. And what we're seeing is what potentially would have taken years for development and for, building an ecosystem of trading around it, took months. And some of the moves in DeFi, if you will, over the past year have been just incredible. And what's really amazing about it is that it's potentially opened up a whole new facet, if you will, of crypto, where we're not just, buying spot, and trading spot. We're not just using leverage to long or short. We're not just using futures contracts to long or short, but we're actually using our tokens and using them to stake liquidity pools and yield farming and all sorts of things that are so new. And that's my point here, is that this is so new. It's still in our infancy. We had this amazing run last summer. There was kind of a bearish time early in the fall of last year in a lot of these projects. They ramped up again on the first part of this year, and winners and losers were figuring out the ecosystem of this. But it's so new, and it's such an amazing thing to think about, that over the next several months and years, how this develops and what comes out of it, because this is the whole vision, if you will, of Satoshi. It was all about a decentralized currency, Bitcoin, and then to be able to then broaden that to decentralized exchanges, decentralized banking, decentralized insurance. I mean, these are all things that can come out of that one idea, which is the idea of the millennium.
But how can you have decentralized insurance? Isn't that only work because you have all the other people who are insured who don't need it?
That's a great question, Cheds, because what we're talking about here is accessibility, reliability, and kind of like ease of use. Like, we think about our daily lives and some of the hurdles we have to go through to get just the basics taken care of. And we take a lot of things for granted. There's all sorts of middlemen and different layers of just things that it's always been done that way. It's always how it's always been. And now we have this new technology that's pushing against these norms and saying, why do we have to go through all these things? Why do we have to go through a broker to buy this insurance and wait for paperwork, and I have to fax forms over here and get this notarized over here and underwritten over here? Well, the blockchain can create and can change and can fix so many of these inefficiencies in our economy. And wouldn't it be amazing that certain kinds of insurance can be acquired from third parties that just feel, okay, I feel that I can underwrite this specific random thing. I don't have to go through all these layers of paperwork and everything. And that's what is so fascinating about what this industry can create over the next several months and years. Price action is price action, and that's how it will be. And we will trade, and we'll take positions, and we'll try and get the most out of what we have to offer in this moment. But the thing that's going to make this last, the thing that's going to make crypto and this technology last, is the true use case, and something that people in their everyday lives can really understand. Wow, this is so much better because we have something that's real, that's stable, that's verifiable, and that you can truly own. And you don't have to go through these middlemen and 800 numbers and helplines where you control all of it. And that's the future that crypto, blockchain, a lot of these projects hope to achieve.
I think it makes sense because, with a business, the question is, what problem is it trying to solve? So clearly there's a problem to be solved. But I wonder about the people who benefit from the status quo. And
yeah, I mean, here's the thing about it. Seems like, and yes, a lot of people are making a lot of money, but I always still feel that crypto, even in this bull run, yes, there's been tremendous opportunities for the average man to make life-changing money, and the average investor to get in positions to make life-changing money. But a lot of the big major moves and a lot of the big stuff has unfortunately happened with a lot of people that are already in that upper echelon class. A lot of the whales, piling on terms of more piling. The thing about crypto is that unfortunately a lot of the supply, a lot of the coins are in the hands of the few. And it doesn't take much for them to move around these markets because we have liquidity times where it's low, and we have too much supply and demand on either side sometimes that can cause pretty significant imbalances, just like what we saw a few hours ago in the Bitcoin price action here. Is this whales dumping on us so they can just know they can buy lower, shaking out the weak hands, allowing the market to dump to just trigger all the stop losses, all the gains over the past couple days, over the weekend, quickly erase like that in a matter of a couple 5, 10, 15-minute candles. I mean, this is the power that a very small amount of people in this industry do have. And it's important to know that it's not just Bitcoin in its theory can be the free open market, but in reality, it's really not. It's manipulated. Doesn't mean it's wrong. Doesn't mean there aren't tremendous opportunities in both directions here, but let's not kid ourselves. We can see these wallet addresses and how much of a significant amount of coin is owned by the very few. That being said, the opportunities in crypto have clearly been shown through this entire year. And if you've been able to capitalize, maximize, and use your risk management accordingly, there's a very good chance you've done very well.
Or you just bought Doge, you just bought TRX and XR.
Doge to the moon, right?
Can we talk about that? We talk about all the TA we've done, all the charts we've done, and all you had to do was just,
3-4 years of charting, trying to figure out nut bottoms, Fibonacci's, oversold bounces.
Yep.
And all you had to do was put your stimulus check into Dogecoin.
You'd have a boat. You'd have a boat.
Yeah, you have a boat.
So it's amazing. So that goes to show. So, some people can make it no matter what, but you can't count on luck, right? So you can't count on that happening. You can't count on the next Doge. Yeah.
I think what I learned the most about the past several months of this bull market is that when the train starts to go, when somebody hits full send, it's full send, and we discussed that in a bear market, rips are for selling. Well, in a bull market, dips are for buying. And once the bull market was confirmed, which frankly, and all of it's in hindsight, but once we were able to cross above 10K, back test 10K.
Can we see it?
Yeah, I can pull up. I don't know. Let's see here. StreamYard.
And folks, this is Big Chonis on Twitter at Big Chonis. Make sure to give him a follow. Hit the like and the thumbs up button to Benzinga for doing this.
All right. So listen, bigger time frames is really what we like to look at. Kind of avoid a lot of the clutter, a lot of the noise. There's no wrong indicator if you're a trader to use. There's no wrong oscillator. There's no wrong strategy. The key is learning it, mastering it, and being consistent with it. I like to personally use the EMA 12 and 26 in my trading strategy, whether it's the weekly, the daily, the 5-minute, the 3-minute, the 1-minute. The EMA 12 and 26 works in my trading strategy, where I define risk, where I define buying opportunities and times where I want to take profit. On the weekly chart here, we can see for the very first time back in mid-April, Bitcoin closed below our EMA 12 for the first time since October of 2020. We then had the quick recapture of that on the follow-up candle, bullishly engulfed the previous candle's bearishness. We see this a lot, crypto, the big flush, and then we go right back up, regain support. And now last week's lows and currently this young week's lows have tested the EMA 12 back-to-back here.
Mm-hmm.
I think Bitcoin is feeling tired, and it's feeling tired with diminishing volume. We can see that in our volume 20 period over the past weeks here. We're falling lower. We're putting in lower highs.
Mm-hmm.
We've tested our EMA 12 for a second time this week on this moment here. I will always remain bullish when we're above both of our EMAs on a higher time frame like the weekly, which gives support above 53. That's closing candle support. If we put in another closing candle below 53K, we're not going to do the same thing, in my opinion, like we did the last time.
Right.
We're going to hold that as resistance, and that puts our EMA 12 in play, and that's currently at 44K and rising. We have to understand that Bitcoin has been incredibly ripping here, digesting this move here from 10K all the way up to 50, 60K in such a short relative period of time.
Yep.
We need to digest it, so that's fine.
Well, but look at lumber. Why if lumber prices are doing it, why can't Bitcoin?
Well, then you want to look at the Ethereum chart for that. They look very much alike.
Yeah.
Bitcoin allowed Ethereum and all the altcoins to do what they've been doing. Yep. The amount of money that flowed into Bitcoin has allowed the altcoins to have the alt season that we've experienced over the past 4 or 5 months. This consolidation of Bitcoin, what do people who like to trade altcoins and invest in altcoins want the most? A relatively stable Bitcoin. Well, let me just give you a 10x here from the yearly lows from last year, and then let me allow you to consolidate for 100 days here, basically sideways. February 15th, right? We were at $56,000. May 10th, we're at $56,000. The one chart, Cheds, that makes that is meaningful, and that's really the key that we have to keep watching, is Bitcoin dominance. This is the roadmap, if you will. There's been a lot of talk about, are we doing what we did in 2017? We know what the bull market was like there. Yep. We had bullish moves followed by 30% consolidation periods, followed by bullish moves, followed by 30% consolidation, and we ended it with the blow off top. Well, this doesn't feel like a blow off top. We haven't consolidated this much in this space for so long. What we have here is an understanding about what happened last time. What happened last time, okay, is when Bitcoin topped off here, right, in November, okay, like this, about right here or so, was Bitcoin dominance, peak.
Yep.
And then Bitcoin bled in dominance, and money flowed into altcoins and flowed into altcoins and flowed into altcoins. Okay, then we had this mini rally in Bitcoin here, and Bitcoin took some of that money back. And then we had this little flow into altcoins, and that basically marked the peak there of that kind of bull move there. So right now, are we in this kind of zone here? Right? This right here is December, right? This was kind of the top. This was the Bitcoin top here. This market dropped dominance. Money flew into altcoins. And then we basically had a bear market for basically 3 years here. So this is the roadmap where as we find support here and Bitcoin dominance begins to rise, is it rising because Bitcoin's falling, but alts are falling a lot more? Or is it rising because Bitcoin's rising and alts are rising a lot less? I think it's the first one. I think that we're going to see money beginning to flow out of the crypto market, relatively speaking, which would push Bitcoin dominance higher. Right. Bitcoin would fall and have volatile moves. But I think there's been, listen, we've seen coins do 10, 20x in weeks. We know that can't be sustained. And we know the volatility as a trader is what we look for. So we're in a very interesting moment. When this dominance chart turns, this is 3 months of just a bleed out. When this changes direction, the market's going to feel a lot different.
But, okay, this is interesting because you made the most important point. It's a question of why it would go up or down. But do we need to come here? This will be like after the fact. Wouldn't you rather just be observing the rest of the market and just seeing that, oh, Bitcoin's going up, so of course the dominance chart's going to be going up? Like, I don't see how you can use this chart to generate a signal or to like.
This is the chart that tells you, can I keep my money in altcoins?
Yeah.
Okay.
But wouldn't it depend on the altcoin? Doesn't it depend on the relative strength?
Yes, 100%. And yes, Ethereum and Dogecoin and Litecoin have skewed this somewhat because it's not like it's Bitcoin and then all the altcoins are spread out evenly. Yeah. It's Bitcoin and the next like 4 or 5 also have a significant amount of market cap, right? So it wouldn't take much for, and remember what happened when like Ripple collapsed? Like a lot of that was this, So we're seeing a moment where a ton of money has flowed into everything but Bitcoin over the past 3 months.
But yet it's still held though. Look where the price is. We're at like 55K and
because that money, which is still held its value, I'm not sweating it. I'm keeping my money in alts because they've been ripping and some have ripped more, but like what they were last month, this month, and I've absorbed all the blows. But this is the chart. When this changes significantly, are we putting in a morning star here? Look at this doji on the weekly. 2 days into the week, still early. But we're starting to get some real tight candles here. It's the market forces are fighting. So we correlate that, and then we go back to our CME. And I'm getting them on the weekly here. And actually, the daily should be more effective. And I'm thinking about the gaps that we still have to fill.
Oh, no, the gaps.
Oh, yes, the gaps. Okay. Now, what's interesting is we actually still have a gap up here.
Okay.
60K. At 60K. Okay. So there you go, bulls. Hey, how about that? But it's not just gaps in price, it's liquidity gaps, in volume, And we think about how quickly we were able to rise up here and to get, to these levels. But then I pull up the VPVR that shows us where, and let's just focus on just this year, right? 2021. And the POC, the point of confluence for 2021 is around $34,000. That's where most of our dollar volume actually arrived in 2021. Okay.
Yeah, it seems low. It's crazy if you think about it. If I told you to guess a number, you probably would have said like 43K, right, or something.
Because you've been above 50K for so long. But no, most of the money this year is $20,000 lower than where Bitcoin's current prices. Now I zoom out to our March lows, right, our COVID lows, and we see that most of the money was put in on the 10K break. There it was. There was the signal. Okay. So we have to ask ourselves, yes, there's been institutions buying and mom and pops, and we're positioning for hedge funds and what have you. But Is it prudent as an investor to think that $55,000 Bitcoin is a really solid value, where so much of this unrealized gains has happened 45,000 or almost 80% of the price below where it currently is? There's nothing wrong with consolidating, nothing wrong with weekly consolidation, higher time frame consolidation. But look how far above we are, and all we can use is look what happened in 2017 and 2013. Just how high the price was above our EMA 12, how high the price was above our EMA 12, how high the price is above our EMA 12. There's a lot of similarities to the spread of our previous bull cycles.
What if this is the peak in 13 and not the peak in 14, Chonis?
That's a great question. We can use fractals, right? To say, oh, this feels more like the 2015 and 2017. Well, in many ways, it's very much like the 2015. We had our low, we had a long consolidation period, then we had a slightly higher low, but still a very nasty dump. Here's our low, here's our long consolidation period, happened to bring us back to 14K. And then we had a significant dump. And this second dump was very similar to what we happened in August of 2015. So now we are on the path of 2015, 2016. Are we here? Are we just a third of the way up? What we've done this time are things we haven't done the last time. We hit, actually it was our Bollinger Band, right? That we hit numerous times coming up. I have to change my thing here.
You're on three or two, yeah.
Yeah, no, we're on 2. I clearly recall that or not that we didn't hit it. It was the 21, right? The 21 EMA that we kept hitting up and up and up.
Yeah.
And stuff, riding up our upper Bollinger there, never touching it. Now we're riding up our upper Bollinger. I mean, there's so many similarities to the last time. The breadth of our Bollinger spread. How many months? This is a monthly here. We rode up our upper Bollinger. Our middle Bollinger is at 22K. At the heights of Bitcoin 20K, the middle Bollinger was at 2K. So there's so many similarities. Clearly, it's hard to say. But the bottom line is we're not seeing the money flowing into Bitcoin that we had seen back in the early part of the year. We're seeing a stock market at all-time highs.
Yep.
Forgetting about what happened on today's price action. But at all-time highs, commodity prices at all-time highs.
It should be no surprise that this is a store of value. It's a hedge against the dollar. So,
but does this look like a ending fifth way diagonal? Yeah, it kind of does. Does this look like a bear flag rising wedge breakdown? It could be. Are we kind of do something of we're looking for the blow off top, but maybe this time is different and we're doing more of like a rounded top?
Yeah, but like even if I followed through in your rising wedge, that measured move would take you to like 40, 42K. I think a shakeout's good. I think 42K would make a lot of sense. We need a little bit of a deeper pull here. I think some people need to get scared. Maybe there's
and that's the question. It's like, where are we in this cycle? Are we exhausted ourselves? Are we consolidating here? But structurally, you have to say to yourself, this is something is definitely different from the last time here. It's taken a while. We've had so many opportunities to break above 60K. Why haven't we? Are we losing momentum? Are we losing steam?
MA 50.
I mean, there's so many things that can allow us to hypothesize there. We're below it again, but we broke it once before. Does it really mean anything? We haven't. We're right on the 100. The 100 saved us last time. Sure. And then there's our 200. Our 200 down at $38,000.
Right. Our
200 hasn't been touched since April 20. So a full year of a rising 200 MA on our daily. My point is this.
Yep.
If you're bullish Bitcoin and you think it can achieve 100,000, 150,000 this year, which a lot of people talk about, this year, this year. If this is the bull cycle, then we have another 6-8 months maybe of this. And if it's going to happen, it's going to happen this year. Then you're basically looking at 100% or more at this current price level right now. If it drops lower, great. You have an opportunity to buy cheaper, a little lower there. So we're asking yourself, if you truly believe the top of this year is not in, and that Bitcoin above 65K and onward is totally achievable, you're looking to buy every dip. This is an opportunity for yourself to buy more Bitcoin, to scale into more crypto, because a bullish Bitcoin overall will eventually flow into all altcoins. Bitcoin hitting $1 trillion market cap, consolidating, altcoins come back and hit $1 trillion market cap. So money will flow out of Bitcoin. The question is, how much lower do we go, and do we create a different market dynamic? And you have to ask yourself, we've been experiencing historically Bitcoin pullbacks 30-40% within the bull market, right?
Yep.
So when do we call this a real break? So for right now, we dropped 27% from that previous 65 down to 48, and now we've come back up.
What was the bounce? Are we in that golden pocket in the bounce?
Great question, So look where we are right now. We have been rejected on the 3-day.
So how about the 16-day?
That's a good one too, and the weekly, right? We closed into it. We had wicks above both weeks there, but we have been rejected by our golden pocket resistance as we're climbing up the mountain from our previous swing high to our current swing low. Okay, and that's where our resistance is.
That's a good size relief rally. Isn't that a good size relief rally to the golden pocket?
It is. So now we're looking at equilibrium. There's our high.
Okay.
There's our low. There's our lower high. And we're not sure yet. We're not sure if we've established a higher low. But for now, 53K is our higher low.
So if someone's new, they could dollar cost average, right? They could get in here. If it goes lower, they could get in there lower. But there's a good chance it could go lower too. So what do you do, right? Do you dollar cost? You
don't have to. What you need to do is wait. We know what our equilibrium is. If we're able to break above 59 or 60K the next time, before we break below 53K, the bulls are asserting, the bulls are trying again. There's a good chance the bulls have control. You can buy the breakout. If we break below 53K, it's a very good chance again that we're going back to the retest, let's say a sub 50K. You can wait, you can be patient. There's a good chance that we're going to come down here and probably break it the next time we get down to 47K. Because our equilibrium is tightening here, and potentially over the next week will continue to tighten, you can be patient and wait. And until this equilibrium breaks, and we get a closing candle above or below, that could establish the next trend.
So you like to wait for the close, not just the candle wick. You want to see a close above or below.
Yeah, because when we're consolidated this much for this long and had wicks above and wicks below, we're going to know. And the key to this is volume. Are we going to start to see real bear volume? We've seen bear candles without bear follow through. Are we going to see bear candles with bear volume this time? Or bull volumes with bull candle this time?
I love it.
I see neither.
So, my friends, this is Big Chonis. He is on Twitter at Big Chonis. Definitely reach out to him. He's very active on Twitter at Big. No, he's not that active anymore, but he puts out great content when he does. He's someone who I think you go back and look at his old stuff, his videos. I think he's an excellent part of the space. He's a friend of mine, excellent part of my life. And again, thank you for coming here tonight, buddy. Thank you much.
Thanks for having me, Cheds. Hey, I noticed you hit 100K on Twitter. Amazing achievement, Cheds. Congratulations. And congratulations on your new book. I hear it's a bestseller on Amazon. They're talking about it on the morning shows. And I'm excited for you and what you've been able to achieve this year. And keep it up, buddy.
Thank you very much, man. We'll talk to you again soon, all right?
All right, man. Peace out. Thanks, everybody.
All right, that was a real tweet. That was a real tweet. A treat. I love hearing from Big Chonis. I like how he looks at the chart, and I like to hear from someone who looks at things a little bit differently than I do. And I think it's important to get a variety of viewpoints, especially when you're new and you're getting started. That's why this program that Benzinga is putting on, Making Bread with Cheds, is a great thing that they're doing. They're bringing this content to you free. Make sure you hit that, smash that like button, and make sure you share it. Comment as well. Let us know how you're doing. Let us know who you'd like to see as the next guest for the next time. So we'll spend some time on that. But just before we go, like he said, with Bitcoin, I'll just quickly take you through the charts for about 2 or 3 minutes, and we will wrap things up. Again, you want to, in my view, focus on the daily MA50. That's going to give us a signal about the strength of Bitcoin. It held for a long time, and now that we've been closing below it and right at it, the bulls are threatened, and we started to kind of reassert it as support. We had 2 closes back up above, and now we're back below. So look for kind of a string, 3-4 closes back up above to perhaps suggest, that bulls are going to be turning things back around or really kind of taking it to that next level. On the weekly chart, keep an eye on that EMA 8. Bulls still have a very good argument while the price is above the EMA 8, certainly closing above that EMA 8, that short-term moving average. You see oftentimes when the price will accelerate in any kind of chart, it will use that 8 EMA. A lot of people use the 8 MA. I use the 8 EMA. Big Chonis use the 12 EMA. That's fine as well. But I like this. It's very sensitive. So if we can get back up above that, you'll kind of know that really the bulls have reasserted themselves. But short term, we're going to get an even earlier clue. We'll get some we'll get some information even sooner from that 200 period moving average on the 4-hour chart. That has been the level that we've been watching. So we'll continue to watch that level. We have this drop now just below, just about 1,000-point, 1,500-point rally. But we're still, the bulls are still vulnerable here. We just dropped below that key level, that blue line. So yes, it's a nice bounce. It's going to take some time to shake out. If you go to a lower time frame, even that 1 hour, you really just see a little bounce and then now rejection on that green line, the 8 EMA. Like I said, 8 EMA is the one that really when it's accelerating. So we may see this for a while with the price kind of doing this, bouncing and then rejecting at that moving average. While that's happening, you're going to look back and see how it's doing with support, and we'll pay attention to these lows as well from just a couple days ago. So just to wrap things up, you can find me. I'm on Twitter at Big Cheds. I did just publish my book, Trading Wisdom, 50 Lessons Every Trader Should Know. You can find that on Amazon. It's easy to read, yet thought-provoking. The biggest feedback I've gotten is that people say it's relatable. It should be, because I've made all these mistakes. And so I try to kind of relate them to you so you can understand them, and hopefully you don't have to keep making them. You can check out Bitcoin Live if you are interested in taking your technical analysis to the next level. I'm a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. And check out chedstrading.blogspot.com. I did put together a beginner's crypto guide back in 2017, 2018. I haven't updated it in a few years, but there's still some good value there. So once again, thank you to everyone for watching. Thank you to Benzinga for putting on this program. Make sure you hit that thumbs up button. Make sure you smash that like. This is Making Bread with Cheds, and we'll see you next time.